Well, coming up on this episode of the Smart Mortgage Show, we are heading into spring. What does that mean for mortgage rates? What does it mean for inventory? Are we still in the seller's market? We're going to cover a lot of different things today in this market update with Bill Litton. Stay tuned. Welcome in. Glad to have you on the Smart Mortgage Show. Once again, I'm Ben George with Bill Litton, Regional Vice President at Cross Country Mortgage. And we got a good show for you, Bill. We're heading into April. Hard to believe. The first quarter of the year is going to be behind us already. But how are you feeling about where we are at the start of the year and heading into spring now?
Yeah, I always feel great about the weather because I love summer, so that's a good thing. I also feel really good about the state of our housing market in a certain perspective, because there were a lot of naysayers out there that thought that home values at some point were going to crash. There was going to be this big correction. We maintained that although we don't love the lack of inventory, it certainly is going to keep us driving that over time, at least a 4% appreciation number. So we have a very strong housing market, lots of new builds, which is there to help with inventory, although it's going to take some time. But we feel good about where it's going.
Yeah, I thought there's a couple of things I wanted to hit on with you in this market update. Let's start with the percentage change in home prices, because I think it's interesting to see. I feel like most people kind of feel like things have either flattened out or dropped off a little bit over the last year or so. But based on the data that's in right now, again, year over year, this was towards the end of last year, but the percentage change in home prices, it still looks like things are very healthy and continuing to tick up.
Things are very healthy. I think the question of when's the bottom going to drop out? Where's the big correction? I think the bigger question is, how long will we sustain this type of growth? Because overall, the national average was about 6.5% increase in home prices in 2023 year over year. In the Mid-Atlantic area, which is where we're in Delaware County and Chester County, Pennsylvania, is primarily where we work. It's higher than that. Mid-Atlantic area overall is 9%. In our area, I think it's just under that. So the market continues to march on in a strong fashion.
Yeah, those numbers are pretty impressive. I think only the New England area had a higher increase. They were at 10.3%. So Mid-Atlantic right there alongside New England with some of the highest increases in the country. It's kind of weird that it moves from basically west to east, west being kind of the lowest increase, and then all the way to the east. I don't know what that means to you, Bill. I just thought it was very interesting to kind of see how that trend moves from west to east.
Yeah, I know that historically that trend is maintained.
Okay.
The exact reason for it, I'm not sure, to be honest with you.
Maybe it's just a higher concentration of population on the East Coast versus the West. Maybe I'm not sure. But
yeah, well, I think there's probably something to do with again, inventory and demand, and more buyers chasing less houses. That could definitely be something to do with it. Out in California, the values are much higher to begin with, so a lower percentage would still mean a higher increase in actual dollars. But it's an interesting interesting dynamic.
Yeah, it is. Another thing that I thought was interesting that we want to share, and we'll also throw this up. If you're watching on YouTube, you'll see it. But if you're listening on the podcast, join us on YouTube. We have some slides, some graphics to go with what we're talking about today and also in future episodes. So make sure you hit subscribe on YouTube. Follow along there as well to see us, but also to see some of the graphics we're throwing in. But another interesting one is when we talk about inflation and kind of tracking that and what that means for interest rates. But the graph that we're going to show really kind of details that pretty clearly, that the rates really follow and kind of trend behind, but follow the same path and pattern as inflation, correct?
Yeah, so if you can check this one out online, it'd be great, because we have a great visual there, a great graphic. And basically what it does show is, historically, this chart is going back to 1972, that interest rates, particularly 30-year fixed-rate mortgages, they lag behind inflation. So when inflation ticks up, the 30-year rate is right behind it 6 months to a year. And then when it comes down, 30-year fixed-rate mortgages remain elevated for 6 months to a year and then start to come down. So what does this mean for your home buying experience? What it means is the Fed is committed to bringing inflation down, and they've done that in a big way over the past year. They've used all their tools to try and lower inflation because that's one of their they only have two mandates. That's one of the two. Maintain a 2% inflation rate over the longer term. So as the inflation numbers come down, if history is any predictor of future, and I think in this instance we can safely say it is, then interest rates will start to drop over the next, I would say, 6 to 12 months, continuing to drop over the next few years. Now, that's barring any extenuating circumstance that we just can't plan for.
Yeah, it's interesting. You see the inflation number start to have that steep decline, but we haven't seen it yet from the mortgage rates. So good news is hopefully that will soon follow, like we've seen over the past, what is that now, 50 years of data. So pretty interesting to kind of see that, and we'll follow this over the next few months and the rest of the year to kind of see if that trend continues.
Yeah, and Ben, just
go ahead.
Really quick, just to add one thing, because this is what I get a lot from our clients. I hear a lot of times they'll say, what do you think is going to happen with interest rates? And it's not a mystery because the Federal Reserve yields a lot of power. And when the Fed puts their mind to it, and when their policy is to bring inflation back to 2%, it's going to allow 30-year fixed-rate mortgages to drop down back into more acceptable ranges. So can I tell you what the rate is going to be exactly? No, but I know a range, and I know over the next 12 to 24 months we're going to see 1% to 1.5% decrease in interest rate.
Well, welcome news, I think, from anyone that is in the home buying process or considering to be there soon. So it's a good thing to track and keep an eye on here moving forward. One last thing I wanted to talk about, Bill, for our market update was the average days on market. And again, January of this year, 2024, again, the kind of the peak over the last few years. But I think what's most important to take away from this, and you helped explain this to me, and it makes perfect sense, is that as you see the trends go up in the winter to where the homes stay on the market longer, the following few months and into the summer, you see that trend drop back down. So we're on the verge now heading into April of this really being a time where more people are in the market, more people are looking for homes, and those days on the market drop again.
Yeah, so there's definitely a seasonality to it. And during the, December, January, people are, for a multitude of reasons, and the holidays actually play a big part. They're not as active out there buying. So houses sit on the market longer. Well, now we're getting into we call it our spring market, because up here in the Mid-Atlantic region, there's actually a more pronounced effect on going into the spring market and how many homes come on the market and their average amount of days on the market. So even though a lot of homes are coming on, the amount of days average on the market drops down because there are so many buyers in the market, and that is their most active buying time.
All right, good to know. So hopefully some good news on the horizon for those that are in the market for a home and looking, or in this case, selling as well, as people continue to get back in the market and look for homes and get busy in that front as well. So a lot to look forward to. I know through the summer of 2024, we're going to keep you up to date as we head into May. We'll have another market update, kind of update you on where we are with, of course, interest rates and that sort of thing, but also what's on Bill's radar in cross-country mortgages. He's tapped in and paying attention to these trends every single day, working with people. So if you are in the market for a new home, looking to have a conversation about a mortgage, what you can afford, what the rates might be, all these different types of things, Bill's happy to have a conversation with you across country. Again, you can call 484-352-4151 or just log on smartmortgageshow.com. You can get more information there. Check out all of our past shows there on the website as well as smartmortgageshow.com. If you're watching on YouTube, again, please hit subscribe. We appreciate the support we've gotten there. Want to continue growing, and by subscribing, you help us do that. Bill, thanks for your time as always. Looking forward to catching up again next month.
Thank you so much.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.